Okay, so I hope you feel that you have started to understand stock markets and are thinking about where to put your hard money. So what do? Do we decide on sector first or company first? It is a classic chicken egg story, but despair not. There's some rules and wisdom gleaned from past experience which can show you the way. Indian sectors. Indian stock markets boast of strong sectors like IT, pharmaceuticals, cement, etc. You must know that Indian IT is globally recognized and admired and also brings foreign exchange into the country. It is India's strongest exchange earner and has spawned a whole generation of middle-class IT professionals. The pharmaceutical sector has both biosimilars and generic drug producers with good research capabilities. This sector strives very hard to meet the stringent requirements of the US Food and Drug Administration and exports to many other regions of the globe. India is the second largest cement producer in the world, while pharmaceuticals is the fourth largest in the world. Indian banking space consists of public sector banks, private sector banks and foreign banks. And this banking sector along with NBFCs, non-banking finance companies, comprise the Indian financial sectors. Table 1 lists the top sectors of the Indian economy and the major companies in it. It also offers returns to the sector investment from the period December 2002 to December 2017. As you can see, auto, cement and energy are the top 3 in terms of return performance. For all its glory, IT is in the middle. Real estate hasn't done too well, has it? Cyclical and defensive sectors. It is said that a rising tide lifts all boats. If your sector happens to be a part of the rising tide, you could invest in that sector and even select companies within it. But to figure out the rising tide, you have to recognize that sectors move in cycles. A cyclical sector is one which waxes and wanes with the movement and general growth of the economy. When the economy does well, the sector does well, and vice versa. Think cement, autos, real estate. Likewise, a defensive sector is one which does well irrespective of the state of the economy. Think consumer staples, food, drugs. How important is a sector's choice? Studies have shown that it might be even matter more than the stocks you pick. Simply said, the worst stock in the best sector often performs better than the best stock in the worst sector. So you need to choose your sectors carefully. Then you can focus on the fundamentals and financials in choosing your company. Later topics on our site address this more closely. Risk inherent in Indian sectors. While it is true that many Indian sectors are profitable, there are some sector-specific risks of which you should be aware. For instance, you must have also read in the news that the banking and NBFC sectors are plagued by NPA, non-performing assets. Pharmaceutical stocks often get significantly impacted by US FDA warnings and rejections of their formulations. Along with IT, they too suffer when the rupee strengthens against the dollar. The cement, metal, real estate and auto sectors are very dependent on economic cycles. There's a timing aspect to sector investing which can be problematic for those failing to do their research. Diversifying across sectors. Financial planners generally advise that you invest a portion of your funds in stocks, some in bonds, and say 5 to 10% of your portfolio in gold. This means that when equity does well, you benefit. When equity does not do well, you benefit from bonds and gold. Let us take this approach a step further. In your equity portfolio, would you put all your money in one company or in companies of the same sector? Remember, diversification means don't put all your eggs in one basket. Therefore, doesn't it make sense to diversify across sectors? One example would be to pick IT for global exposure, drugs for defensive, and auto for cyclical. In this section, a useful guiding factor is the correlation between sectors. IT and drugs have shown a low correlation with each other. On the other hand, think of real estate and cement. When more houses are built, demand for cement goes up. So these two sectors are quite correlated. You can use mutual funds that invest in specific sectors of the economy and let their managers do the sector-specific stock picking for you. Later topics in this module also discuss exchange-traded funds. While these are beginning to get popular in India, we are confident that in time these investment vehicles will provide a lower cost method for achieving sector diversification. In conclusion, Remember that the only constant is change. Even the sectors we have mentioned above are affected by technological innovation. The advent of machine learning and artificial intelligence has given the IT sector new spaces to conquer. In addition to removing the headaches of driving in urban India, Uber and Ola are also moving into delivery services. How many of us now use online payment systems without thought? There is the emerging sector of fintech, financial technology, that will provide investment opportunities. So in addition to investigating existing sectors of the Indian economy, keep a lookout for new players and new ones. And as always, come back for more.